So good afternoon, everyone. Myself, Anjali Nair, on behalf of Kirin Advisors. It's a pleasure to welcome you all to the Investor Conclave, Investor Connect Summit 2026, powered by Avinash Mentor and co-powered by Kirin Advisors. Today marks the second day of our two-day summit, featuring a powerful lineup of focused management meetings. And this is the sixth interaction of the day with Patel Retail Limited. From the management team, we have with us Mr. Rahul D. Patel, the CEO. Good afternoon, sir. Welcome. And we have Mr. Hitesh Savlani, the CFO. Good afternoon, sir. Welcome. And from Avinash Mentor Research Team, we have with us Ms. Bhargavi. Good afternoon, Bhargavi. Welcome.
Good afternoon.
With that, now I hand over the floor to Bhargavi. Over to you.
Before we start the session, let's have a quick overview about the company. Patel Retail Limited is a value-focused retail supermarket chain serving Tier 3 cities and nearby suburban areas, offering food, FMCG, general merchandise, and apparel for the whole family. It began with its first Patel's R Mart store in Ambernath, Maharashtra, and now operates across the suburban regions of Thane and Raigad districts. As of today, the company has 49 stores. The company has set up a processing and packaging facility with a product testing laboratory for quality checks on raw material and finished goods, and expanded operations with a second unit to process peanuts and whole spices like coriander and cumin seeds. It has also developed an agro processing cluster comprising a fruit pulp processing unit, a dry warehouse, and a cold storage facility. The company exports staples, groceries, pulses, spices, and pulps under its brands Patel Fresh and Indian Cheska. With that, now I hand over the floor to the management for a brief overview. Over to you, sir.
Good afternoon, everyone. It gives me great pleasure to welcome you all to Patel Retail Limited's conference call. We will discuss the company's performance for the fourth quarter and full year ended March 31st, 2026. But before I dwell into the financial number, let me take this opportunity on the behalf of the management to extend our sincere gratitude to all our shareholders, investors, and stakeholders for their continued trust and support. FY26 has been a year of strong execution and steady progress for us, marked by consistent growth across our business segments, expansion of our retail footprints, and strengthening of our integrated operating model. We have continued to build our own foundation of over 3 decades, positioning ourselves as a scalable and value-driven retail and FMCG company. Patel Retail Limited operates a well-integrated business model spanning retail and manufacturing and processing. From a single grocery store in 1990, we have grown into a trusted neighborhood retail chain serving customers across Mumbai metropolitan region. As part of a continued growth journey, we launched our 58th store in Thakurli during Q4 FY26, further strengthening our presence across high-density suburban and emerging markets within MMR. Building on this momentum, we inaugurated our 51st store in Rasaini in April 2026, taking our retail network to 51 stores and over 2.29 lakh square feet of retail space. Additionally, we received a DGFT authorization for wheat flour and related products, strengthening our export capabilities and enhancing our access to global market. Our cluster-based expansion strategy enables strong local market penetration, efficient supply chain management, and faster store-level profitability, while the manufacturing and processing segment supports margin stability through backward integration, efficient sourcing, and strong export capabilities. Our integrated facilities in Ambernath and Kutch, with a combined installed capacity of over 1.47 lakh metric ton per annum, plays a critical role in ensuring supply reliability and supporting both domestic and international operations. Our private label portfolio, Patel Fresh, Indian Chaska, Blue Nation, and Patel Essentials continue to gain strong traction and contributes meaningfully to our retail revenues. We remain focused on increasing our share further as it plays a key role in enhancing margin, strengthening brand recall, and improving overall product mix. Now, turning to our financial performance for Q4 FY26, what delivered a strong performance during Q4 FY26 with the total income increasing by 53.35% year on year to 339.55 crores. EBITDA grew by 31.21% year on year to 22.74 crores, while EBITDA margin stood at 6.70%. PAT increased by 39.07% year on year to 9.98 crore, with PAT margin at 2.94%, and EPS stood at 2.99, registering a growth of 3.82% year on year. FY26 was a landmark year for the company with the total income crossing the 1,000 crore mark and growing by 28.25% year on year to 1,059.29 crore. EBITDA increased by 33.07% year on year to 83.08 crore, with EBITDA margin improving by 28 bps to 7.84%. PAT grew by 54.48% year on year to 39.05 crore, while PAT margin expanded by 63 bps to 3.69%. Consequently, EPS stood at 13.03, reflecting a growth of 26.50% year on year. Also, we achieved a significant milestone in FY26 with the retail sale increasing by 16.33% year on year to 429 crores and a transaction value volume reaching a record 58 lakh bill cuts, representing a growth of 11.54% year on year. These results highlight our trajectory and demonstrate the strength of resilience and integrated business model. Looking ahead, we remain focused on expanding our retail footprint with aim to scale our store network through beyond Thane and Raigad into Western MMR suburbs and Pune, with a phased entry into other cities across Maharashtra and Western India. At the same time, we will continue to enhance capacity utilization across our Ambernath and Kutch processing unit, alongside investment in automation to improve productivity and cost efficiency. In parallel, we are prioritizing the growth of private label, digital engagements, and export to drive margin improvements and strengthen long-term brand equity. These initiatives, supported by prudent financial management, position us well for sustainable and profitable growth in the coming year. In closing, I would like to thank our team for their continued dedication and our customers for their trust in us. Our vision remains to build a leading regional value retail chain with national aspiration anchored on affordability, accessibility, and trust. Thank you. We can take
Thank you, sir. So participants, the floor is now open for Q&A session. Kindly raise your hand or drop your questions in the chat box. Yes, Bhargavi, please go ahead with your question.
Sir, after a robust FY26 earning performance, the management has provided a powerful forward guidance of 20% plus revenue growth and an 8 to 9% EBITDA margin for FY27. So, which segments, core grocery, retail, apparel, private labels, or exports, are expected to lead this margin expansion?
So both the segments are going to lead to the expansion in retail through our share of private label, and in our manufacturing and processing through our brand development, as well as expanding our footprints alongside UK, Canada, which where we export. You saw IPM, which has great margins. So shifting our focus basically from trading to processing and manufacturing and increasing our private label share would eventually help us into gaining that kind of margin. Moving further.
Sir, I have one more question.
Yes, please.
Regarding the inventory, your inventory base has scaled up significantly, about rupees 260 crores. As the company continue to expand store sizes, how is it attempting to optimize inventory turnover days and squeeze better credit terms from suppliers? I'm asking this question in the view of your huge accounts payable at rupees 88.79 crores.
Hitesh sir, can you please?
So, so we are working on our credit terms with the debtors also, and since our non-retail segment, which is manufacturing processing unit, has a enough capacity to absorb the sales, and therefore we are carrying the excess inventory to meet the demands.
Okay, sir. Thank you for answering the question.
Thank you. So we have a next question from Mr. Harshit. Yes, Mr. Harshit, I request you to limit your questions into 2 or 3 questions.
और
Yes, you
मैम
can
थैंक
go
यू
ahead with it.
गुड आफ्टरनून पटेल सर सर अभी जो हम अपनी ब्रांड का सामान बेच रहे हैं हाउ मच शेयर वुड दैट बी इन रेलेवेंट कैटेगरी इन आवर रिटेल फुटप्रिंट मतलब मसाले और कोई भी फूड प्रोडक्ट्स हो गए
17.50 is the share.
अच्छा सर और ये मतलब
Okay.
कहाँ तक जा सकता है प्रोडक्ट मिक्स मतलब ऑप्टिमल आप
21-22% हम एम कर रहे हैं सर.
अच्छा बाकी सब मतलब 78-79 would be rest of the
Yes,
brands in the market.
yes, third
So
party.
sir, next 2 to 3 years, this how much share would be retail business versus जो retail marts हैं versus your own manufacturing exports and ये जो अभी fruit pulp का भी लगाया.
We say since our Gujarat plant has more capability in improving the revenue as well as the margins. So Dubai would be all. So our Gujarat plant would like manufacturing and processing would be around 55 and retail would be 45 is where our focus is going to be. So 45, 55, the share would always be within that range of plus minus of 2-3%.
But sir, it seems like कि manufacturing would overtake retail and then मतलब continue to grow मतलब और can they both grow at a similar pace कि मतलब 50-50 रहेगा
Yes,
5 साल बाद भी.
certainly, right? I mean, the infrastructure to grow in manufacturing and processing unit is already installed. Whereas in retail space, our let's say store location and doing all the prerequisite that we need to open a store takes a little more time than anticipated. That's why it's just it. So in the short term and medium term, manufacturing and processing would grow at a much faster pace than retail. Retail is going to grow at its own steady pace because we believe in not just opening store just for the sake of numbers. We want to have good revenue with a stable PAT across retail region with focus on private label share. So all of those trying to build that product mix takes a little more time than manufacturing and processing. So when we see in long term, yes, both are going to give us equivalent growth. But right now, as I speak, manufacturing and processing has a lot more capabilities um, than retail as of today. Not saying that retail is going to do anything less, right? We still have plans of opening retail stores like 10 to 12 every year. We are going to enter new markets, new regions, try to bank on tier 4, tier 3 cities. Um, but with that being said, talking about medium term, short term, we see a lot more capability in processing.
So one last, I mean, so what is the break-even time and the break-even sales for any new store? And how do you calculate break-even? मतलब क्या क्या उसमें आप include करते हैं जो rent हो गया, staff salaries हो गई. So yeah, I mean,
100%.
अगर कोई नया
Yes,
store
sir.
आज
Yes.
खोले,
Sorry, please.
हाँ नहीं जो अगर नया स्टोर आप आज खोलें तो उसको ब्रेक इवन होने में कितना टाइम और कितना अमाउंट लगता है मतलब एट व्हाट पॉइंट डू यू से कि अब ये EBITDA break even है या whatever your internal metric is?
Hitesh sir would give you a precise answer for this.
So Harshad, let's say 24 to 25 months is the period to recover the entire capex and to achieve the break-even sale. However, we are operationally break-even from the day one. Okay.
अच्छा.
हाँ, बाकी मेरा जो कैपेक्स और ओवरऑल जो मेरा डब्ल्यूसी लगा है ऑलमोस्ट 24 मंथ्स लग जाता है मैच्योरिटी में.
So what do you mean by operationally break even? मतलब staff salaries, power cost.
हाँ, तो the margin at which we am operating is
Okay.
enough to cover all my these indirect expenses also.
Okay. Got it. Thank you, ma'am. Thank you, sir.
Thank you.
Thank you, sir. Next question, please. Participants. Yes, Bhargavi, please go ahead with your question.
Sir, the company recently received formal export authorization for wheat flour and related products from DGFT. Given that you already export to over 35 countries, how material will this specific product clearance be to your international bulk trading revenue in FY27?
I mean, talking about international markets, I don't think there are any objection to international market. It was always Indian government's suggestion to stop the export, right? When it comes to clearance in other countries and their execution, there is no such thing as you just have to pass the QC test, right? Which we are very well aware about. So the production has been done on the same standards. Yes.
Also, so talking about the EBITDA margins, how do the EBITDA margins of your international export business compare with domestic brick and mortar supermarket retail? Also, is there a risk that higher export volumes would dilute the overall retail margin profile?
It is, sir. No.
So our EBITDA margin from export sales is almost in the range of 9 to 10%. Okay, and we do not see any kind of deviation if we continue with the exports because we are end-to-end maintaining the both.
All right, sir. Thank you.
Thank you, sir. So we have a question in the chat box from Miss Dia. She's asking capex for new stores.
So basically, you can say roughly capex of 75 lakh is the capex to open a new store, initial capex.
Okay,
That
thank you,
all
sir.
depends on the size, right? So the per square foot calculation comes around 2,000 rupees of capex, right?
Yeah.
Yeah.
Okay, thank you, sir. Next question, please. Yes, Mr. Harshit, you can go ahead with your question.
Thank you. So I think uh, some time ago you would also mentioned that your retail stores could serve as dark stores for your Blinkit.
Right.
But so is that idea
It is,
shelf?
it is almost on the final phase. We are just
Acha.
selecting our delivery partners. So third party delivery partners, or do we have to execute delivery on our own? We're just trying to figure that out. Hopefully it will be live soon, right?
So sir, what's the model here? मतलब आपके स्टोर से जो Blinkit के dark stores हैं में इन्वेंट्री सप्लाई होगी एंड देन ब्लिंकिट वुड
ब्लिंकिट के
देन
डार्क स्टोर में नहीं सर, जो
ओके
हमारा ऐप है उसमें ही हम क्विक कॉमर्स का ऑप्शन देने वाला है विद इंस्टेंट डिलीवरी, वेयर अ स्टोर वर्क्स एज अ डार्क स्टोर and delivers within 2 to 3 kilometers of radius. Now the very important part of that entire execution is our delivery partners, right? And the supply chain management. So we are in talks with a few other companies who do third party delivery and cost us per delivery. Or the other way that we are thinking is we do our own delivery and try to capture that data as well. So we are in between that process. When it comes to infrastructure wise of the application, that's been done. Now we have stumbled upon the delivery part of the business.
सो सर यू मस्ट हैव सम डेंसिटी पैरामीटर or something, no? मतलब 50 में से कितने स्टोर्स में ये पायलट, इफ यू स्टार्टिंग इट ऑन अ पायलट बेसिस, व्हाट
Right.
एरियाज आर यू सीइंग कि मतलब जहाँ पे डेंसिटी अच्छी खासी हो, एंड व्हाट ऑर्डर
Right.
वैल्यूज आल्सो वुड यू सी कि मतलब ब्रेक इवन हो या डिलीवरी में मतलब एटलीस्ट घाटा ना हो पाए?
Right. So we already so there are two ways to look on it, right? Since we are already present in like tier three, tier four cities where Blinkit and Zepto haven't reached yet. Plus we are also plus we have stores in high density area. So we bank on both the things. We introduce quick commerce and get the first movers advantage there, where Blinkit and Zepto hasn't been able to reach there, whereas stores are already there. And when it comes to high density area which are in between, right? All of those areas are high density, but are in those cities where Zepto and Blinkit are already there. Let's say Ambernath में Zepto और Blinkit already है, right? तो हम एक जो सेंट्रल स्टोर है जहाँ से मेजोरिटी ऑफ द एरियाज गेट कवर्ड विद इन लाइक 2-3 किलोमीटर्स, हम अंबरनाथ में वो स्टोर को डार्क स्टोर बनाएंगे. And then seeing on the response coming from the other areas as well. Once we get live, right, we have a constant report where we figure out के कौन से पिन कोड से login हो रहा है. Once we reach that significant number, we might introduce second store as a dark store and cater those areas as well. So we are not going to miss on opportunity either ways, right?
एंड सो
जहाँ पे इंट्रोड्यूस नहीं है वहां पे भी करेंगे, और जहाँ पे ऑलरेडी.
कैलकुलेशंस, no,
Sorry.
sorry. So early calculations that you've done, मतलब what sort of additional marketing expenditure, मतलब users को app download करवाना tier 3 cities में, then to get them to use it, and then delivery third party, मतलब is this margin accretive or must top line increase होगी but bottom line थोड़ा dilute हो सकता है? मतलब are you doing it to increase sales या actually margin accretive है?
सर देखो, मार्केटिंग हम लोग का ऑलरेडी अभी चालू ही है स्टोर्स का. सो द गुड पार्ट फॉर अस इज वी डोंट हैव टू डू एडिशनल marketing for it. There are multiple ways and there are low cost ways where so me being a household name in the regions that we are already present, marketing wouldn't be a issue. There are multiple ways that we have figured out where we can make our consumers install our app, be it at our check-in counter or be it through our in-store promotion. Uh, for as of now, we haven't planned any big marketing campaign within the region that we are present. We are trying to put our step forward in terms of word of mouth firstly, and then in store through promoters. How many people can we make download our app? We already have around the 100,000 applications downloaded
Okay.
for now. Yeah. So for now, when it comes to marketing, we are not going to do any kind of burst marketing or such. We are trying to do as organic as we can and try to give a service to our consumers who are already engaged with us.
Okay, so one last question. So which is your biggest store and where is it?
Our biggest store in terms of revenue or in terms of size?
So दोनों बता दीजिए.
In terms of size, Ambernath में एक है शिव गंगा स्टॉक, which comes
Okay.
around 10,000 square feet. और our highest revenue wise store is Tigwala.
Tig वाला.
Yeah.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you, sir. So we have some questions in the chat box. The question is from Mr. Lakshmikant. He's asking, post IPO, your debt equity ratio improved dramatically from 1.34 to 0.34. How much of the remaining high interest short term borrowing do you intend to completely retire in FY27 utilizing the current working capital optimizations?
Just a second, Hitesh sir.
For the fiscal 27, we are looking further reduction of the debt. This ratio may continue because we have already repaid enough loans. So to maintain the working capital requirement against our sales, this ratio will continue.
Thank you, sir. So the next question is from Ms. Dia. She's asking FY28 revenue growth.
Revenue you can consider organically in between 5 to 10%. But our main focus for this year is going to be bottom line. We want to really focus on bottom line, get the margins right.
Thank you, sir.
Yeah.
So her next question is margins in private label, manufacturing and retail.
Gross margins, like net margins. Hitesh sir will give you both.
So our gross margins from private label almost in the range of 35 to 40% on an average. And for non-unbranded sale, third-party brands, we have a margins in the range of 18 to 20%.
Thank you, sir. Next question, please. Participants, do you have any further questions? Sir, the next question is from Ms. Dia. She's asking sustainable margins.
I haven't got the question. What do you mean by sustainable margin?
Ms. Dia, could you please elaborate your question? Sir, Rahul sir, you're in mute.
Dia, I'm saying we already have a sustainable margins. We are already doing profits. So I don't know what answer are you expecting. Sorry if I didn't get your question.
Sir, till then we'll take the another question. The another question is from Mr. Lakshmikant. He's asking your in-house private labels like Indian Chaska, spices and staples, Patel Fresh, Blue Nation Apparel, and Patel Essentials yield sustainably higher gross margins than third-party FMCG merchandise. What percentage of your total retail billing did private labels constitute in FY26, and what is your terminal growth for them?
Lakshmikant ji, around 17.5% is what our private label share is right now. In medium to long term, we aim on planning around 21 to 22% for our private label.
Sir, Ms. Dia is asking, can we see margins reach 9 to 10% in few years?
Certainly, we aim for that. That's why we are working in processing and manufacturing as well as trying to improve our margin and retailing. We have already introduced our brand in just kind of local market within spices category. Further moving on, we would be introducing few more categories in terms of Indian Chaska. Yeah, certainly we hope so. Calculations.
Okay, thank you, sir. Sir, I think we have covered majority of the questions. So if there are no further questions, can we conclude the session, sir?
Sure.
Thank you, Rahul, sir. Thank you, Hitesh, sir. Thank you, other participants, for your time and participation. If there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you, Rahul, sir. Thank you, Hitesh, sir. Thank you, Bhargavi.
Thank
Thank you.
you. Thank you, Bhargavi. Thank you, everyone.
Thank you, sir.
Thank you, sir.